Greetings from Rideshare Hartford. So I haven't made a video in a while, but I wanted to discuss a really important topic, which is purchasing rideshare insurance. And so I'm going to make this a two-part video. So the first part, we're just going to discuss rideshare insurance in general, what Uber provides for insurance, why you need rideshare insurance, and then what type of rideshare insurance is available. And then the second part of the video, since this is a Connecticut-based channel, is going to deal with the insurance situation in the state of Connecticut. So how rideshare works, or the insurance works for Uber. So we're in insurance terms, a rideshare trip is divided into 3 periods. The first period, which is called period 1, begins when you turn your app on, and it ends once you accept the trip. Period 2 begins when you accept that trip, and it ends when passengers board your vehicle. And then period 3 begins when passengers enter, and it ends when the passengers leave. And once your passengers leave, then you return to period 1. Okay, so Uber receives insurance through James River, and James River insures most of the other rideshare companies as well. And so what I'm going to explain about Uber's policy is similar to Lyft's policy, similar to Tride's policy, etc., because they're all insured by the same company. So period 1 includes limited liability coverages. 50, 100, 25, which means 50,000 per person, 100,000 per accident, 25,000 per property damages. And the important thing to note about this policy is that it is contingent. And what that means is that you need to report a period 1 accident to your personal policy, and in the event that the personal policy denies your claim, then Uber will sort of pick up the tab, or you're eligible to file the claim with them. Period 2 and 3, this policy offers much more generous coverages, up to $1 million per accident and liabilities, as well as uninsured motorist. And additionally, collision is available, but that is also contingent. And what that means is that you need to hold collision in your personal policy in order to receive it through this policy. Additionally, there is a $1,000 deductible for a collision claim, or a collision payout, I guess. And then that's a little bit different for Lyft. I believe it's $2,500 for Lyft. So now you're probably wondering, well, if Uber has this policy, then why would you need to have personal insurance that is compatible with this policy, especially since all Uber tells you is that you need minimal insurance. So when Uber says that, what they mean is they will, as long as you have minimal insurance, they'll let you drive. But that doesn't necessarily mean that your insurance policies could be thrilled about this if if you just have minimal insurance. So here are the 3 major reasons in terms of why you need some sort of compatible insurance for your personal policy. The first one is that in order to keep your personal policy. So if you get into an accident, or for whatever reason your insurance company finds out that you're doing rideshare, the insurance term for this is livery, which means you are making a living or making money, making profit by using your vehicle, by transporting people with your vehicle, or transporting food with your vehicle, then they'll drop you. And so if this happens during an accident, you could be left with no coverage because your personal policy drops you. Then your Uber's policy is contingent on you having a personal policy. So if the personal policy drops you, then then James River will also drop you, and then you're left with no coverage at all. And you will also be left hard-pressed to find coverage. And if you're relying on rideshare to make a living, well then you're in pretty deep water. So that's the major reason. An additional note about this is if you notice during period 1, the coverage is contingent. So you would have to let your personal insurance know, which means you would be hard-pressed to get personal coverage, or you would be hard-pressed to get coverage during period 1 if you don't have a compatible personal policy. The second reason is that there's certain fringe benefits that you don't have through Uber or through the James River policy. For instance, collision during period 1. Also, if you had any other things like towing or any other benefits like that, Uber doesn't provide any of those. And then the third reason is that, as we all know, we have to address the white elephant in the room here, is that Uber does not play nice with others all the time. And so I've heard mixed reviews about the James River policy and how Uber handles claims, and I've heard mixed things. So I've heard sometimes they work it out and they help you out. Other times they make it really difficult to get covered and to get taken care of. And so, but that's really more of a tertiary reason. You do have coverage. It's just a matter of, do you really want a company like Uber covering you? So, so those are the three reasons. Now, well, what can you do? What can you do about this? What can you get? So there's 4 types of insurance that you can get that can address this problem. And I'm going to list them from the least amount of coverage to the most amount of coverage. So the first is a rideshare friendly policy. And all this is just your regular personal policy, except whichever company is giving you or selling you this policy is rideshare friendly, which means they really don't mind if you are ride sharing. Their policy is that as long as the app is off, they'll cover you. And if it's on, they won't cover you. So the benefit of this is they don't track your miles, or they don't have a mileage requirement. So you could drive as many miles as you wish through Uber or through any other TNC, and it won't be counted against you and won't raise your rates. The con of this is minimal coverage. So you are completely dependent on James River when the app is on, but you're covered when the app is off. Another benefit is that you can contact them if you get in a period 1 accident. You don't have to sweat it. The second type of coverage is some sort of rideshare endorsement or period 1 coverage. And basically this is to sort of fill in that period 1 gap. So an endorsement your insurance company will actually cover period 1, and then some of the benefits is that your coverages and also some side benefits, whatever, if you have towing or if you have any of these other medical or any of these other coverages, they'll be extended into periods 2 and 3. So that's kind of the benefit. And then what's the drawback here is that they do have mileage requirements. The idea behind this is that these companies don't want to sell this insurance to drivers who are doing this full time or putting a lot of miles on Uber. This type of insurance is designed for the part-time driver. And so as you can see so far, the first type of insurance solves the first problem. The second type of insurance solves the first 2 problems. And now the third type of insurance, which is a hybrid policy, is going to solve all 3, which is basically a hybrid policy. It just covers you through all the periods when the app is on or off. And the benefit of this is, you're fully covered. You don't have to, if you're a little leery of James River, if you're a little leery of Uber, then you just don't have to deal with them at all. You are covered. Well, and the other thing is you're almost doubly covered, because you could file claims with both. Or you could if one doesn't work, you can file a claim with the other. But the drawback here is, again, mileage. They do have mileage requirements, or they have maximum mileage. And again, the reasoning is that, so I guess for financial, because I know with these hybrid policies, they are more supportive of full-time drivers, but there's still a maximum. And then the fourth is a commercial policy. And so and obviously, actually, this solves all three problems and beyond. The value of this is you could just start your own limo company. So you would start with Uber, you get a commercial policy, be driving in some premium classes. That's the other thing too. In order to drive premium, like Uber Black, Uber SUV, Uber Luxury, you've got to have a commercial policy. And so that's kind of that's one perk. The other perk is that you just don't really need to deal with Uber at all. You could just start your own limo company and drive privately. Maybe you could start by driving in these premium classes, and then as you build up private clientele, wean yourself off of Uber and Lyft and your other TNCs. That's the value of it. And then, but the con is these things cost multiple thousands of dollars per year. Way more expensive than any of the other three options that I've mentioned. So that's it for this first segment of rideshare insurance. In the second segment, I'm going to talk about the types of the companies that offer insurance in Connecticut, how to get your quotes, and then a few tips on how to decide on which one to choose. Another thing too is also note that I'm not an insurance professional, nowhere close to it. So everything that I'm sharing with you, please take into account that fact. I'm not giving you advice. I'm simply just sharing with you. So anyway, guys, have a great evening. Like, share, and subscribe.